Our third category of legal entities is S corporations. We're taking the benefits of running a corporation and combining the pass-through taxation of a partnership. Let's see how this one plays out. S corporations do have some rules that need to be followed, and if you don't follow those rules, you will lose your S status and ultimately become a C corporation. So if you're running an S corporation, you want to pay close attention to those rules. One of the big ones is you cannot have more than 100 shareholders. If you go to 101, you go to 102, you're going to forfeit your S status. You got to stay under 100 shareholders. Number two, only individuals and certain trusts can own shares of an S corporation. An LLC cannot own an S corporation. A C corporation cannot own an S corporation. A partnership can't own an S corporation. You got to be really careful when you have shareholders buying into an S corporation to make sure it's an individual, and there's certain trusts that meet the exception of buying into an S corporation. And number three, there can only be one share class of stock. Now, you can split it between voting and non-voting, but you can't offer Class A, Class B, preferred. It's one share class of stock with an S corporation. Like its big brother, the C corporation, the shareholders of an S corporation will elect the board of directors, who then elects management. And it's not uncommon for all three of those categories to be the same people. You probably have the shareholders on the board who also manage the company within an S corporation. The Articles of Incorporation do govern the S corporation, which defines the responsibility of the board of directors, the officers, shareholders, etc. It will define how many shares the company can also authorize. The Articles of Incorporation is a key document when you're running an S corporation. And again, you want to get an attorney to help you write up those Articles of Incorporation that get filed with your state. I also have another video where I go through shares issued, shares authorized, and shares outstanding to get a sense of what those three different categories are. I'm going to link that in the description. Take a look at that and get a better understanding what those different categories mean. All right, let's go through the taxation of an S corporation, which looks a lot like a partnership and nothing like a C corporation. S corporations will file tax form 1120S, and like a partnership, will generate a K-1 for all its shareholders. Shareholders will report the K-1 on their 1040 where the taxes are paid. Again, this is a pass-through entity. The S corporation is not paying the taxes. The shareholders are paying the taxes on their 1040. So let's look at a quick example. All right, we got an S corporation again with $1 million of income, and shareholder Hector owns 50% of the shares of that S corporation. Hector will receive a K-1 for his pro rata ownership, $1 million times his 50% ownership to get a K-1, to have K-1 income of $500,000 that he will report on his 1040, and that is where the taxes are paid. S corporation income, unlike partnership and LLC income, is not subject to payroll taxes. You're not going to have to pay Medicare or Social Security with S corporation income. One thing you do want to take into consideration is to make sure you're paying yourself a reasonable salary. In other words, S corporation owners shouldn't just pay themselves distributions and not a salary, which a salary will be subject to payroll taxes. It's a W-2 income. A lot of times people will set up S corporations and pay themselves a $10,000 salary and take all the profits out as distributions to avoid the payroll taxes. There is a reasonable salary test that the IRS can audit you on to determine if you're paying yourself a reasonable salary for your position, for the business that you are in. So you want to be really careful. Don't take the $5,000 salary and pay all the profits out in distributions. You want to have to pay yourself a reasonable salary and then take the rest of the profits out as distributions. The IRS doesn't want you to avoid payroll taxes. They just don't. Pros and cons of an S corporation. Pro number one, payroll taxes. We just talked about payroll taxes. S corporation K-1 income is not subject to payroll taxes such as Social Security and Medicare. That's a major advantage over a partnership and an LLC. Pro number 2, no double taxation. This is in reference to C corporations. S corporations benefit from pass-through taxation. Distributions reduce the shareholder capital of the ownership in the S corporation, much like basis in a partnership. Distributions are not subject to further taxes like dividends in a C corporation. We will touch on double taxation a little bit more in our next category, which is C corporations, to get a sense of how C corporations, dividends in particular, can be double taxed. Pro number 3, corporate liability protection. You get the benefits of being a corporation, the maximum liability protection that a C corporation can offer with the tax benefits of a pass-through entity. Con number 1, 100 shareholders. You are limited to 100 shareholders in an S corporation. This can be a challenge if you're trying to raise cash, capital to expand and scale up a business. Distributions have to be paid pro rata to ownership. This doesn't seem like a big deal, but paying out distributions pro rata to ownership can create some major headaches when you're trying to develop compensation models for shareholders who run the business. You end up having to pay out more wages, which are subject to payroll taxes, if ownership percentages don't line up with the compensation model. Basically, you're losing one of the pros of an S corporation if you can't get compensation models to line up with ownership. I've experienced this. It can create some headaches. It's definitely a con of an S corporation. Con number 3, setup is more complicated than an LLC and more than likely more complicated than a partnership. Corporations have more paperwork and they're more costly to set up. You will definitely need an attorney and a CPA to help you set up an S corporation. You do not want to guesswork setting up an S corporation. You want to be thoughtful on how that gets set up. The board of directors will have to schedule regular annual meetings and take minutes. There's a lot more corporate governance related to running an S corporation and a C corporation compared to a partnership or an LLC.